pessimist, but I don't believe in it. Finding a true love is bullshit. Cause I felt sad love, I felt bad love, sometimes happy love, sometimes into giving up. I felt hurt love, got the word love, what the hell is.
Hi. Hello to a beautiful Tuesday. Hi there. Today, it's a holiday. And we are here live again on Traders Talk. Welcome to today's edition of Traders Talk, where we will share with you another great content. And today we are talking about bears. Okay, and today we're talking about bears, and of course, this has been the third week of the year. This is the start of the third week of the year, and again today, yesterday was a holiday. Yesterday was the market holiday, and today we are starting with a crash, not a big crash, but the ES futures actually opened up. Break today down by 60 points, and of course when the market opens later, there will be a lot of hoo-ha in the market where you will see a lot of rates probably, yeah. So welcome, and of course today we want to actually share with you how to actually brace yourself for a market crash. And I'm not saying that the market will crash, but of course whether there will be opportunities or whether there will be threats in event that the market is down, or there is actually a retracement coming onto the market. Yeah. So let's get started. So for those who can actually who have just joined us, welcome. And of course, if you can share and like this show so that more people can actually benefit, that will be great for us. Yeah. Okay. Last week, as you have seen that, right? I mean, even in our show, we have actually talked about a bit more about the market situation, where the volatility has been high, right? Has been high. So in our first few show of the year, we actually cover a bit more to actually go about to show you how you can actually brace this kind of situation, this kind of market, and how you should be going through it, whether you are an investor or whether you are a trader. Yeah. Okay, let's put this up. Okay, if you can see this, give me a like so that I know you can actually see this. Let me show. Let me see. Okay, all right. Okay, let's put it bigger. SPX. Okay, this is the S&P 500, right? The SPX index, right? Okay, if you look at the start of the year, right? Actually, we started the year with a high here, somewhere around here. Yeah, we started the year around here, and of course, after 2 weeks of trading, right? 2 weeks of market open, right? Basically, we are down by almost 4%. We are down by almost here. We are actually here. We're down by almost 3%. And of course, if the market continue to actually go down today, from the futures, it seems that it will probably open gapping down. Probably it will be at around 4,006, close to 4,600 level. So if it goes down to there, then we will be actually going to about a 4% retracement. Yeah. And of course, in the past, the retracement has actually been more than 4%. In fact, the average retracement actually goes down around 5+%. And you can see in the chart, the next level would probably, if it goes down, would probably even go down to about this level, 4550 level, or even it may actually retest this moving average, 150 moving average here, 150 moving average here. Yeah. So I mean, we can't stop it because we are not controlling the market. But of course, we have to actually go through it. If you are already invested, then of course you would see your portfolio coming down. And of course, if you are trading and if you have positions which are long, then of course you will also see that those positions would if you have made profits, the profits would probably will come down. And of course, if you have uh, not made profit, then of course the trade may turn into red. So basically, what type of trades should we actually go in during this time, and what should we do with our investments? We will also cover it during our show today. Yeah. And the other thing I actually wanted to share with you guys is also to show you the market volatility for the past 5 days. Yeah, for the past 5 days. Here, let's see. Let's put the speaker. 200. Okay. All right. Okay. Okay. If you can see this, okay, that's great. Okay. So in the past 5 days, right? Let's put this over the other side. Okay. Put this. Okay, so if you see in the past 5 days, on 10th of January, the market opened gapping down at 4646, and then at the close, basically the market went up by about 16 points to and close at 4662. Okay, so this is actually the opening and closing, but within the day, nowadays we actually see that the volatility, the day volatility, that means the up and down for the day is actually quite high. And here you can actually see that it opened at 4646, right? 4646. Then of course it went higher during the day and continued to go higher. Sorry, this is low. Yeah, it went. It actually went to 4644. The high of the day was 4673, 4673, and of course the low was actually 4582. And basically you can see that the intraday, that means the day movement, is actually about 90 points, which is about 2% of the SPX for the index. Okay, so this is actually a day movement which actually comprised of 2% movement. So within the day itself, the market can go one side, and of course, if we feel that, oh, the market today is going up, and we actually trade it up, and then uh, it went the other way, and then it went the other way. Then we see that it went the other way. Then we wanted to trade it down, and at the end of the day, it moved up again. So this is actually a very big whipsaw thing in the market, where it goes one way and then later it goes the other way. And you can see this happening quite often during the past actually past 2 weeks. This has actually been happening, and this is only for the last 5 days. Of course, on 11 January again, you can see that the intraday is about high and low is about 76 point, which is about 1.64%, which is also quite high for a day movement. And of course, on 12th of January itself, the movement is about 42 points. And then subsequent days, again, close to 2%. And then on Friday itself, 1%. Okay, so this is how uncertain the market is. It is going up and down, and also causing a lot of problems for traders. And of course, if you are trading credits, right? If you are selling premiums, then of course when the market goes up, right, goes up, then you will be rolling your puts up, rolling your puts up to protect the losses which is coming down from your short calls, right? Yeah. And of course, if the market is actually going down, then of course you are rolling down your calls to protect your short puts. And within the same day after you have just finished one side, the market actually turns the other side. So this has been quite difficult for premium traders, credit sellers, for such kind of a market. So strategy wise, also we have actually moved a bit, changed a bit on the strategy to try to actually mitigate some of these uh, so-called uncertainty and ups and down in the market, even within the same day or in a short time of period, within the one day up, one day down, one day up, one day down. You see, yeah. So this is S&P 500, and of course, as I said today, it's probably going to open red, but possibly at the end of the day it can also close with a green from what has actually happened last week. Yeah. And on the Nasdaq itself, Nasdaq again, you can see that the retracement has also been I think more than 5% as compared to this S&P 500, right? The retracement for this has been about to the lowest is about 7, close to 8%, close to 8% to the lowest, and of course the current level is already 5%, 5% level. And today the futures, I saw that it is the Nasdaq, the futures is down by close to 300 points, 300 points. Yeah, so if it's down by 300 points, so you would probably be at this level, which is going back to the previous low level of about 15200, 15200. Yeah. So again, if you are trading on tech stocks, then if you're long, then of course there would be drawdown in your portfolio if you are long, and of course if you are short, then oh, that's a great thing to see, because you will be putting on some profits if you are short the market, especially on some overvalued tech stocks, which I will also share with you a bit more later in the show. Okay, so let's come back to here. Okay, so this again market crash, whether there's an opportunity or a threat, actually the thing I wanted to share with you guys here is that this is actually a coin, right? I mean, there is actually always two sides to a coin, right? Two sides to a coin. And when there is actually two sides to a coin, right, that means that whenever, whatever the situation the market is, whatever the situation the market is, you can actually choose, what you want to do. And of course, if the market is down, you can choose to actually short the market or short some stocks. And of course, when the market is up, you can also choose to long the market, or long the market. So this is what we can do, and it's not necessary that when a bear market comes, right, it's all doom and gloom, that at the end of the day we will lose money, or we will not do anything, sit by the sideline just to wait for the market to actually go up. In fact, if you have actually looked at the history of the market, right? The time the market actually stays down is actually very short because people do not like to see a bad market very long. And of course, over the years, basically, what has happened is that all markets down will recover. All markets down will recover, and of course, the position for a decline is actually only a temporary decline. In fact, even the big crash during the March 2020, right, when the COVID came, it only lasted about 3 weeks plus 4 weeks. Yeah. Only a short duration of time, and of course, subsequent to that, the market has actually went up more than two times since. Yeah. Okay, so always remember there's two sides of the coin. There is no point for you to say when the market is down, you actually want to exit the market because there are many opportunities depending on which side of the coin you choose. Yep. And you are always free to choose whichever side, whether you actually want to trade on the short-term bear markets, trade on the short-term bear markets, or you actually want to find opportunities when the market actually reverses and go up again. And of course, that kind of decisions depends on whether you are actually an investor or you are actually a trader, whether you are investor or trader. And of course, if you are actually on the investing side, in fact, this kind of a situation, right, is actually the best time for you to actually buy good stocks which are undervalued. Buy good stocks which are undervalued, because good stocks and great stocks would continue to actually go up over time, right? Will continue to actually go up over time. And of course, when there are opportunities for these stocks to come down in price, that is the time where you actually get this bargain to actually buy more shares. Yeah, it's just like how to say? It's just like ladies, right? I mean, ladies like to shop, right? Okay, ladies like to shop. And the funny thing about this, the ladies, right, some most of them actually want good bargains, and they can actually they are actually very patient. And of course, if you talk about investors, the best investors are ladies, because they tend to be more patient, whereas us guys, right, we are very impatient one. And why I say these ladies are actually very patient is that they can actually see something which they like. They like, okay, for example, they see a bag, maybe it's a Chanel bag or a LV bag or whatever. The bag is actually just launched, and it is very pretty, it's very nice, okay. And they always wanted to have a new bag, buy a new bag. They also have the money. Girls always have the money, when boys always spend all their money and are broke. Whereas the girls, right, they always have a lot of money kept, and they want to save it for the future, save it for the future. Okay, and what is the future? Okay, so coming back to this bag, so they see a LV bag or a Chanel bag that they like, and they want to buy it, but they go to the shop, they try it, they feel it, they take selfies, they post it on the internet. Although they haven't buy it, right, they post it, they feel good, they know that this bag is very nice, very good quality, and they always wanted to have this bag. But they look at the price, they say, okay, the price is overvalued, I do not want to actually buy this bag, I do not want to buy this bag, because the price is a bit pricey, and it is a bit out of my budget. Okay, so they don't buy this bag, they just go off very happy, because they touch it, right, they feel it. Okay, then they go off, and then the next month they actually come back to the same shop. They come back to the same shop, they look at the bag, the same bag again, they look at the bag. Okay, and of course, this time they look from outside, they don't go in anymore. Okay, they look from outside and they see the bag next month, and they see that, okay, probably there's no sale boards there, they don't go in, and again the following month they go again. And before you know it, right, they have actually they have actually um, gone to this shop probably 1 month once, and it has already been 12 months. 12 months. That's why I say they are very patient. And on the 12th month, they actually see this bag again, still there. Although it's not the latest model, they are fine because they like this. So then 12 months later, they see that it is actually on sale. It's actually on sale, and that's the time where they go in the shop and they actually buy this bag at 40 or 50% discount. Okay, the same bag which they went 12 months ago, which was priced probably at $5,000, and after 12 months, they actually go in again for the same bag. They buy it at 50% discount. Okay, so that is actually a bargain for these ladies, that they can actually own this bag at 50%. But although they own it 12 months later, right? But at the end of the day, they own it. Okay. So these are the kind of things which we guys should actually learn from what is that, ladies, because they buy things with great bargains and great value. So in investing terms, right? We also want to actually buy things with great bargains and great value. Of course, sometimes we see that the stock might drop 5%, 10%. It is still a bit pricey, a bit overvalued. If we are patient enough, then of course we can actually buy stocks at even 20, 30, or even 50% discount for a great company which has actually great potential going forward, and can actually make you much more returns if you actually buy it undervalue. Okay, and of course when the market is down, the market tend to be a bit irrational. I mean, even great stocks like Google, say Facebook, Microsoft, Adobe, and whatnot, there is actually no fundamental change to the business, no fundamental change to their business. It's just that the price goes down alongside the overall market sell down, and these stocks also get hit and get hurt, and as a result of that, the value and the price of the stocks goes down. Okay, so we as investors will actually take this irrational action by the market as an opportunity to buy stocks. And of course, you have to uh, keep an eye out to actually watch for what are the stocks which you actually want to put in your portfolio, or you even want to add the positions in your portfolio. You have to actually have so-called levels of buy-in, which you feel comfortable to actually go in. And of course, we do that, we don't even go in at one shot, because the 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 market, right, we do not know when the dips, right, will actually come to a halt. And in the past what is that, 12 months, basically we see that the dips has been about 5% on average, 5% on average. Yeah. So of course you can use this an indicator also as a potential buy-in points for stocks which you actually like. So whenever the market goes in so-called retracement of 5%, then you can actually start to do some a little bit of shopping, and of course if the market continue to retrace, then further to another level, and of course that is the time where you can also get to add in more positions into the stocks which you like. Yep. So split your buy-ins of stocks which you love into 3 or 4 buy-in points according to your intended so-called portfolio or allocation size for this kind of value stocks. Okay. Yeah. So that is actually for investor. And of course, the dips which we actually see during this time, even though we have a first buy-in point and then the price continue to drop, right? The second buy-in point and the third buy-in point, it may even drop after your third or fourth buy-in point. But of course, if you are an investor, the so-called investment horizon for you, right, is actually on a long-term basis, 5 or 10 years. And if for value and good stocks, right, if you actually really look into the longer term charts, right? Basically, all these dips in the markets, right, for these stocks is actually only a very small blimp, a very small blimp, and eventually, over time, the prices for value stocks would actually go up. So it's not a big worry if you're an investor to have temporary dips in your portfolio, and we can actually split these buy-in points into three or four. Why we split it into three or four? Because we do not know when the reversal will come. We do not know when the reversal will come. And of course, if we are waiting for the price to actually come too low, and before it actually reached that point, the prices of the value stocks has already gone up, right? Then that is the time where you will actually miss the your investment buying points. Yeah. So these are the ways where we actually trade as an investor. Okay. On the other side, if you are a trader, then of course, how do you actually trade this kind of market? And we can actually also just go by the trend, just go by the trend. And of course, if the market is down, then of course, if we are long on stocks, right? If you're long on stocks, the tendency for us to actually get stopped out or get what is that, negative in our position is actually a bit high. Yeah. And of course, in such kind of situation, we may not want to actually go long when things are still uncertain. We do not want to actually go long when things are not uncertain. And of course, as I said, if you go with the trend, then you can actually look at how to say, the trend is actually currently slightly still coming down, right? Then of course, um, you can actually do trades which are bearish, and I'm not asking you to short strong fundamental stocks. Okay, as I said, strong fundamental stocks, when the market bounce, it will go up very fast. So to actually increase your probability as a trader and following the trend, right? You need to actually find stocks which already have a downtrend, I mean, example of stocks which actually have a downtrend for the past 2 or 3 months are tech stocks. Okay, and what are these type of tech stocks? These are the so-called tech stocks which has made people a lot of money. In 2020, probably these are the tech stocks which has helped people make a lot of money. These are the tech stocks which has actually helped funds like ARKK make 20 over percent returns during the good years, or even more. And of course, these are also the stocks which has actually made the same fund to actually lose last year, to lose last year. Okay, so this may be the stocks which you actually choose to actually short during the volatility when the market is actually down. Yeah. And of course, it is actually much safer for you to actually do trades using options is actually one very safe way for you to actually play short term with very cheap entry values. And of course, if you want even more certainty, you can actually do certain type of uh, trades which can even give you a probability of even 70 to 80% chances of wins. Yeah. Yeah. So as a trader, yeah, you can actually do this type of trades to benefit. I mean, I will give some examples later on, give some examples for you on the both side, whether you are actually an investor or whether you are a trader, to actually see what type of stocks we can actually trade in the market. Yeah, so great. So if you guys have any comments, any questions, please by all means post in the chat box. Then I will go through them during the show. Yeah. Okay, so what are the opportunities here? Okay, I will share with you some of the things which a trader or also investor can actually do during this kind of volatile times. Yeah. Okay, let's put this up. Okay, so as a value investor, right? As a value investor, okay, some of the things which we can actually do. Let me put this speaker. Okay. So, okay, so as a value investor, some of the things which we can actually do is to actually look for buy-in opportunities. Buy-in opportunities. Okay, this is actually what is this? Microsoft. This is actually Microsoft. Okay, Microsoft is actually a very I don't need to actually explain what Microsoft is, right? Everybody uses Microsoft, right? And of course, if you can actually see the trend for Microsoft over this is actually over the past 1 year, right? It is actually up by quite a lot, 20, 30% at least, 30%, about 100, and this is no all the way last year. I think it's up about 20 over percent last year, if not mistaken. Yep. So Microsoft is actually on a uptrend. Midterm is actually on the uptrend, and if you look even at long-term basis, right? Let's put month. Oh, month is too big. Okay, let's put week. Okay, let's put week. Okay, this is since when? This is since month is okay. Month 5 year. Okay, let's put 5 year. This is actually the 5 year trend, right? 1 year, 5 year. Okay. So this is actually since 2017. Yeah. So 2017, you can see Microsoft is about $60, right? And today, of course, Microsoft is about $310. And I'm not sure whether uh no, I don't. I think these are all adjusted for stock splits already. Like, yeah. So Microsoft is at $60 how in 2017, only about 4 or 5 years ago. Yeah. And of course today Microsoft is $300. And if you look at the dips, right? I mean the small dips along the way, it comes down a bit. Along the way, it comes down a bit, but overall on a long-term basis, it tends to go up. So this is actually the similar trend for all value stocks. Do you guys agree with this? Do you guys agree? Yeah, if you guys agree, put in a love that everybody loves Microsoft. Yeah. So again, let's put this back to 1 day, 1 year. Okay. So again, Microsoft, right? Microsoft is currently trading at about $310. $310. Okay. And Microsoft has actually went on a high of about $347. $347. Okay, $347. In fact, earlier, I have also how to say, earlier when Microsoft was at about 320 over dollars, right? Before the dip, I think just around here, I've also some sold off some positions in Microsoft when it was about 325. I think when it first reached this level here, this level here, I have actually sold off some of my investment portfolio in Microsoft. Yeah, I have actually sold off some at this level. So and then of course now to see it actually coming down again, right? And this is the time where I do again my buy-in. Yeah, my buy-in again because the value has actually came down from its high. Value has actually came down from its high. So what's the price now? Today the price is actually going to come down by another $4. Another $4. Yeah. So it closed at 310 last Friday, and today is going to be about 304. So I have actually also placed personal in my own portfolio a buying point at about 300. Yeah. 300. 300. Actually, any price around here is already okay for you to actually add in positions at this kind of level. But of course, I tend to be a bit stingy. And I place at a 300 level to see if it can actually comes down to the 300 level to actually pick back some stocks. Yeah, remember I sold at 325, then now coming back to any point I buy is already a better point from the previous one which I actually sold, right? So 300 level, when it actually comes down, there would be good potential to put in your first order, first entry level here. Yeah. So if you see Microsoft in the past, it don't go into so deep retracement all the way down to this 150 moving average. It's only this time the retracement has been a bit more, mainly also probably influenced by the what is that, the tech, the interest rate hikes, right? Interest rate hikes, probably Microsoft will be a bit oversold also, together with the broad market, what is that, fear on the interest rate hike. So this is one level where you can actually start to top your positions already for Microsoft. Yeah. And of course, other things which you can actually also look at. I mean, these are my personal what is that, watch list on the investment side. Which I want to actually get more shares. Get more shares. The other one is, of course, Adobe. Okay, Adobe is another very strong growth stocks, right? Very strong growth stock. It went all the way to a high of about $700. $700, yeah. And today it has actually retraced almost about 25%, 25%, and it seems that it is continuing to actually go down because of the general broad market decline, or rate market, right? It tends to actually go down. And of course, for Adobe, even earlier, I've also already started to put in my buy-in points. The next level, which I would probably target to add more, right, would be at about the 500 level. Yeah, it seems now to be about $5.11 pre-market, right, down by another $9 today. Yeah. So if I can get in another buy-in point at 500 for Adobe, that would actually be great. Yeah, because you see in the past also that Adobe has come to, let's see, Adobe has come to this price here, right? This price here is almost about 480. Yeah, if you want more value but uncertain if you can actually get it, you can even wait for it to actually go down further to 480. Yeah. But if you do not have any positions on Adobe, you can already start to add if your first buy-in point, right, at 500 as your first buy-in point. Yeah. 480 is another one. And of course, at this level, somewhere at 440 is yet another buy-in point for Adobe. Yeah, and of course, these are all going to be longer-term investments in your portfolio. And we are not saying that we are buying in today and going to sell the next 1 or 2 weeks. Yeah, so because we do not know if you can continue to actually go down further. Yeah. So split your buy-in points. So Adobe is another growth stocks which I'm actually eyeing in to add more positions. And one other one which is in the healthcare sector, which I'm also looking at, is United Healthcare. Again, last week, remember when we spoke about how to actually go through a volatile market, right? A volatile market. one of the things which I touch on is actually to diversify your portfolio, yeah, and to diversify your portfolio into different sectors. Of course, the tech sector is actually one on the growth side, which you can actually put, and of course, the other sectors which you can actually put in investment portfolio is in other sectors such as healthcare. Okay, healthcare is on a longer term. How to say? Healthcare and health insurance, like, yeah. So I mean, at the end of the day, this sector is actually a sector which everybody need. In fact, you may, the older you go, right, the older you go, the more kind of assurance you need to actually have on your health, and the more money you're actually willing to pay these kind of companies to actually get healthcare protection. And of course, with more how to say, if with more viruses coming in and all, a lot of people would tend to, how to say, would tend to be willing to actually invest their savings into better healthcare plan to protect themselves and their family. Yep. So as you can see, on the healthcare sector, overall, basically the trend for the healthcare is also going up. Yeah. So UNH is one, and of course, the buy-in points which I'm actually looking at would be coming back, would be a bit lower for UNH, right? For me, I would actually looking at the level at about this 440 level. Yeah, 440 level would actually be one point which I'm willing to pay for the initial. I don't have any positions long term on UNH. Not big lah, but I'm adding in more. So the first point is here, yeah. And of course, if you do not have, you may also consider looking at the buy-in points. Buy-in points. But one thing to be cautioned, of course, on the healthcare side, right? The gap down, when it really happens, it can actually be quite big, yeah, quite big. The gap down for this healthcare, yeah, because last, I think it was last week, when the another healthcare company, Humana, right? Humana actually spoke about their earnings being dropped by future earnings, dropped by about 50%, something like that. When they actually spoke about undercutting of prices and whatnot, the price actually dropped about 20%. You see, all the way it actually came down. And of course, the sector is actually very interrelated. And of course, if one company makes a very bad statement about the industry, right, the other so-called related would actually be hit. Yeah. So that is actually on healthcare, and of course, on the other thing is actually on leisure. Okay, all of us did not have leisure for the past 2 years, right? But the past 2 years, no leisure, no fun. Only look at the stock market every day. No, okay, great. So for the past 2 years, basically, some of the leisure stocks, right, has actually taken a hit, and Disney is actually one stock which is actually one great stocks to actually hold in the leisure and hospitality area. Of course, besides Disney land and the hotels and whatnot, right? Disney have also the what is that? The TV, right? The streaming TV like Netflix, okay? And of course, probably since they have not Netflix, Disney Plus, right? Disney Plus, it has been able to actually so-called attract more buy-ins into Disney, despite the past 2 years. Disney has parks and all has been open and close during this pandemic. Okay, but of course, from the highs of about 200 over dollars, right? Disney has now retraced back to almost about how much? Retrace back here to almost now about 25%. So it's actually 25% down from its high, and of course, uh, when this pandemic goes away, and of course there would be one day if the pandemic goes away, like if not next month, 6 months later, if not 6 months later, 1 year later, I don't know. Okay, but of course, eventually, when things goes back to normal, right? Okay, this is one stock which potentially be able to actually go back to its high. And of course, the other thing which Disney's and many other companies also started, right, is going into this hype of the metaverse, right? The metaverse and selling NFTs and all these kind of things. Okay, so of course this is one new revenue channel for Disney. Yeah, in the past it has gone into the what is that? The Netflix, the streaming, online streaming, and of course the other channel which you can actually build on is the metaverse channel of virtual theme parks. And if you can't go to Disney, right? If you can't go to Disney, I mean, if they create a virtual theme park, probably people would also pay a bit of money to actually go and see what does how does it feel? How does it feel? So this is one potential area which can actually grow for Disney, and of course, when they are just starting this, and when the price is 25% lower from its high, right? Then of course, it is also a potential entry point for investors who do not have Disney for Disney. Yeah. So buying points currently for me would be sitting at about 150. 150 probably can be a bit more stingy because the market is still down. Today is already going below 150. You see? So 150, 145, even at this level, it can also be one level about 145. It can also be the first starting point if you do not have any portfolio on Disney. So this is what I'm actually doing to actually add my positions in different sectors, the growth sector, healthcare sector, what is that? The hospitality sector. Yeah. And of course, generally, my portfolio also tend to be a bit heavy on growth stocks. Yeah, growth stocks. Google is another one. Where I would want to actually add in more at about probably at about 27. Yeah, 27. To add more positions because I sold off some of the Google when it was about two two about 2970. I think 2970 I actually disposed of some, and of course when the retracement comes now, it's okay for me to actually add on because it does not make a difference to my portfolio, because previously I was already holding Google. And of course Google, many things are coming in, growing, continue to grow the what is that? The other sectors which are going, the autonomous driving and all, is one again potential for Google new revenue stream. Yeah. So many things for Google. Everybody use Google every day. So these are the on the investment side, right? On the investment side, these are the things which I'm eyeing on right now to add on during the market retracement. Okay, the other thing when we go on to the other side, as a trader, okay, as I said earlier, short short stocks is one what is that, one possible thing which we actually can do during this market volatility, where it tends to be more red than greens during the past 2 weeks and continuing now. Okay, so one stock which I mean I have already partially exited some positions in Roku. I mean Roku has been one great stock which has actually made a lot of people a lot of money. Yeah, but of course depending on where your entry is, right, where your entry is, it can also be a place where you lose a lot of money. Okay, and Roku from the highs till now basically has actually dropped, not this, it has actually dropped by about oops, about how many, I think 40 over percent at least. How many percent? Let's see. Roku dropped about, yeah, 64%, not 40 over percent. Okay, Roku has actually dropped 60 over percent. Okay, and if you hold a stock which has dropped 60 over percent, like the China stocks and all, it's actually very painful. Okay, so Roku has actually dropped about 67%, and the trend for it is continuing to go on a downtrend. Yeah, yeah. So this kind of stocks, yes, of course, potential is for you to actually make short term gains by going on the short position. What type of trades do we actually do? And of course, if you're actually doing options, you can either do a credit spread, meaning you actually sell a call, and you sell a call and you buy a call at a higher price. Yeah, so it's actually a two-legged strategy where you can actually do, as you can actually do here is 168. You can actually do sell a call here and do a protection at a higher strike. Yeah, $5 with $10 with is possible, of depending on what is your risk tolerance and what is your portfolio size. Yeah, the bigger it is, you can do, but of course generally $5 to $10 with it's fine. I mean, if you do a credit spreads, and of course if Roku continue to drop, and even if it goes up, right, even if it goes up, it don't go above your short call strike, right, it don't go above your short call strike, you would still be okay in the trade. And of course if it goes down a lot, then you can even exit the trade fairly quickly. Yeah. The other one, of course, if you do not like to do credit spreads, right? If you do not like to do credit spreads, then of course you can even do debit spreads. Debit spreads is where you actually buy a put. I mean, generally put would cost a bit more if you buy a single put, right? It will cost a bit more. And of course, as I said, you do not know whether the market can continue to go down or whether it will going to become very bullish in the next 1 or 2 days. Then of course, if you just do a single put, and if the trend actually reverses, and if Roku stops the, how to say, bottom out and actually goes up, right, then of course you would actually lose the full, probably a very big value or full value of your spreads, of your just a single put. Yeah, single put. Then of course, to give protection for you, then you can actually do put spread where you actually buy a put near at the money, and of course you sell another put to reduce the cost at the strike where you think that Roku will drop to. You can use expected move as one indicator based on the expiry date as the indicator where the price will land in that duration. And of course, if it goes there to that short put strike, right, then at close to the maturity date, then that will be the place where you get the max profit out of the trade. So for this kind of debit trades, generally uh, I would do $5 with $5 with. That means the difference in the strike price between the put and the short put would be $5. And if I do $5, basically I would actually do a shorter term trade, 30 days, and sometimes even only a 2 weeks short trade. to go in and out to actually ride on big down days for the market, and also stocks which are actually on the downtrend like this. Yeah. So Roku is one which is actually going on a downtrend. SQ is also another one which is actually going on a downtrend. Yeah. Twilio is one. Twilio is also one. These are all the so-called tech growth stocks, tech stocks. Yeah, tech stocks which is actually going on a downtrend. Yeah. And of course, how to say? Now is also going down. But of course, be a bit careful if you actually want to short now, because when now wants to go up, right, it can actually go up a lot. Yeah, it can actually go up a lot. Yeah. So so this is a bit dangerous. Yeah, a bit dangerous. But it is also having big big down days. Big down days. You can see that one day it actually go down by quite a lot. But of course, the bounce up, you see, when it goes down, it actually tend to bounce up. So for stocks like this, you can actually do even very short trades, um, 1 day, 2 day kind of trades, in and out, it is less risky, not to take it on a longer duration. Yeah. So different stocks, different stocks, different kind of duration, different type of strategies where you actually put in to trade these kind of stocks. Yeah, we're only going on to options. I mean, we are not trading on the stock itself. We are not trading on the stock itself. We are only doing it via options strategies. Yep. So yeah, so these are the some of the stocks as a trader, what we can actually do to actually ride on the market trend, and what are the type of stocks which we choose is also along how the market views this type of stock, whether it is actually overvalued, and now people are not going into it, so-called moving away to other sectors. So these stocks would tend to be sell down by the market, until a point where the value of these kind of stocks, it is really dirt cheap against the prospect which it has. Then of course that is the time where these stocks would tend to reverse from the downtrend. Yeah. So this is okay, so this is actually what I wanted to share with you guys today. Um, that within the market there is actually opportunities. Within the market there's actually opportunities. We are free to choose. We are free to choose whether we are an investor or whether we are a trader. Then we would actually take different type of decisions, and we can be both. We can be at the same time an investor. We can also be at the same time a trader. Of course, a trader would take short-term opportunities to actually make money, and we ride basically along with the market trend to trade, to put in our trading positions. And of course, as an investor, we look on a longer horizon. Longer horizon, and we don't really focus on what is really happening right now. Yeah. So this hope that this have actually give you a bit more perspective how to actually maneuver a bear situation like what we are having. We are not going into a bear market. We have not reached a bear market yet, but of course it is actually uh, um, more red days, and when the red days come, a lot of people are fearful. A lot of people are fearful. So don't be fearful. Yeah. Just watch what are the opportunities that actually brings us, and we can profit regardless whether it is actually a bear or a bull. Great. If you have any question, post on the chat. And of course, today is a public holiday here. And I mean, basically, it is just a good rest day for everybody. And If you have any question, post here. If I can answer now, I will answer. If not, then of course I can actually address them after the show. After the show, if you can actually post it on our Facebook page, you can post it there, and I will actually address them there. Yeah. So okay, all right. So we will hope to see the market now is red, right? Okay, the market now has actually improved a bit lah. Not so scary as earlier lah. Earlier it went down 60 points. Now the futures market went down about 47 points. And of course, the Nasdaq is still a bit scary lah. It is still about 250 points down. And of course, as I said, Nasdaq will be more volatile than the SPX because it's more technology driven on the Nasdaq market as opposed to S&P, which has various sectors and not all sectors are actually down. Okay, great. So I will catch you next week. Next week, hopefully, the market will actually improve. And while we have a red day, then let's make the best use and best opportunities that we have when the market opens. Okay, so I'll catch you next week and stay safe, everybody. I will see you then. Bye bye.